Hello, good morning. You're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Sneha. Well, Sneha, very good morning to you
Good morning to you, Vinny.
US markets, what have they been doing? What should we be expecting from the handover that we're getting from the global markets?
Right, let me quickly take you through what the US markets did last night. And the US market capped off another positive session on hopes of Fed skipping rate hikes. The S&P 500 and NASDAQ each notched their highest close since April 2022. And the Dow Jones added 189 points or roughly 0.5%, and the S&P 500 jumped almost 1%, and the Nasdaq was up 1.5%. Now let's see what led to this rally then. And Oracle shares jumped 4% in extended trading after earnings beat estimates. According to the CME Group's Fed Watch tool, 78% of traders are betting on the rate hike pause, and Apple shares closed at an all-time high at $183.7 a share. And Tesla shares rose for the 12th straight day to notch its longest winning streak on record. Now let's quickly look at stock futures then, and they're flat ahead of the key May CPI data report, and on a yearly basis, economists expect a 4% jump in inflation. Now the inflation's annual outlook marked a 2-year low in the latest New York Fed survey. Also shifting focus to the European markets now, and they closed slightly higher Monday as investors prepared for a week of major central bank meetings in the US, Asia as well as Europe. DAX was up almost 1%, FTSE up 0.1%, with most sectors in the positive territory. And in the European markets, auto stocks led the gains, roughly 1.4% higher, and the stock 600 was up 0.1% as well. But Vinny, this is how the global handover looked like. Can you run us through a list of what the commodities did and also highlight what the crude did last night?
Absolutely. First, let's talk about the crude, because crude actually fell as much as 4% overnight. But this morning, it's managing to come back to those gains. We'll be having the Fed rate decision as well, so which is an important factor that we're keeping an eye out on. And obviously some recoveries on the ground of the previous day's plunge also. It had 4% fall, so obviously we will see some bit of an up move, at least flattish or whatever. It's up almost as of now. Terms 0.03% is what Brent crude oil is up by, and WTI crude oil is also up by almost 0.1% in trade. Brent crude oil is trading below that around that $72 per barrel mark as of now when you look at it, while WTI crude oil is down almost below that $70 per barrel mark as well. Let's keep an eye out on the Fed monetary policy decision that will be coming in. That's going to be important to watch out for as well. And obviously oil prices faced the downside because what happened was China was in terms of the economic recovery, that has not been as expected in terms of lines, and China is among the top consumers for crude oil, and that is the main reason that we've always seen a fall coming in most of the crude oil prices as of now in the recent times. But keeping an eye out on what happens to crude oil prices going forward as well. When you look at gold prices, what are they doing? Gold prices are up and comfortably trading around the $1,971 per ounce mark as well. Obviously, we saw a bit of an easing coming in on that front overnight because of the Fed rate decision that we'll be watching out for. But as of now, trading with gains of 0.1% in trade. So yes, everyone's keeping an eye out on that big Fed rate decision.
Absolutely. Let me quickly run you through a list of all the important cues that you need to keep on your radar today, domestic as well as globally. Now today you've got the big US CPI numbers coming out. Also when you look at UK, you've got the jobless claims change number coming out. Corporate action on Dalal Street, you've got Shriram Pistons that's going to mull for issuance of a bonus equity share issue, and Canara Bank. So today is the last day to buy to be eligible for dividend. And among other events, you've got the US FOMC, all eyes on that. It begins 2 days meeting in Washington from today. Bank of England governor will testify to the Economic Affairs Committee, and the US NSA to arrive in India for extending bilateral trades. So all of this is going to take place today, so keep an eye out on all this action.
Absolutely, a lot of action that is going to be starting, and especially for the second half of this week. But let's move on and talk about one of those data points, that is US CPI data. Now this is the week of obviously macro data driving moves on the equity markets, and all eyes are on the key inflation print expected in the US later today. Now we will see price increase that were a point of bother to the consumers over the past 2 years are slowed down. Now, will the deceleration be enough to convince the Fed to hit the pause on the hikes? A 0.1% month-on-month increase is what is expected. Now, excluding the food and energy components, CPI is expected to rise 0.4%.
Right, and Swiss lender UBS formally announces that it has completed the takeover of its rival Credit Suisse. In an open letter, the bank's chief said they will not be compromising UBS's strong culture and conservation risk approach. The group will now manage UBS and Credit Suisse in what will be the 21st largest bank in the world. However, questions linger over the future of assets, including Credit Suisse's prized retail bank.
Okay, let's move on and actually staying with more deals activity. NASDAQ will be buying software Adenza for a sum of $10.5 billion. This is the exchange's biggest ever deal, broadening its financial footprint. And not just that, the deal further NASDAQ's bid to become a more tech-centric company with steadier revenues.
Let's keep it with the US markets then, and software vendor Oracle's Q4 top and bottom line surpassed expectations. In a reaction, the company's shares zoomed 5% in extended trading. Now, the company's revenue surged 17% on a year-on-year basis, and the top source of revenue, cloud services and license support, jumped 23%.
And the food delivery company Grubhub announces that it will slash as many as 400 roles, which is a nearly 15% of its workforce, citing a need for competitiveness. Now, the company has stated it will and offer actually a minimum of around 16 weeks surveillance, but the impacted positions and group of employees remain unknown. The company has struggled to capture the market share, lagging behind in terms of industry peers like Uber Eats as well as DoorDash.
Italy's former Prime Minister and the billionaire media mogul Silvio Berlusconi passed away yesterday. It is said that he was suffering from leukemia and developed a lung infection. He was Italy's longest-serving premier, mostly known for transforming the country's political scenario and his fraternity with the Russian President Putin.
And expanding its India's plans, electric car maker Tesla can look at establishing its supplier base in the country. Officials from the electric car maker came and met Indian government officials last month regarding setting up the manufacturing plant here. Now, billionaire Elon Musk owned Tesla is already looking at India as a productive and innovation base, and these operations can be expanded to include even suppliers too. Now, ET Now Sumit Chaturvedi is joining in with us to give us more details on this. Sumit, tell us, what are these big plans that Tesla has for India? What should we be expecting?
So far Tesla was planning to have a manufacturing base here and planning to source maybe some components from China, but as sources tell us that now the components will also be sourced from Indian companies. So Tesla is planning to have a vendors base here in India, which means that majority of these components will be sourced from Indian component makers. Majority they are quite famous around the world. Many of them are supplying to global car makers already in India and overseas. That is the plan. Apart from manufacturing in India, as we understand that Tesla met Indian officials, government officials last week, and there were discussions that manufacturing plant will be set up. After that, Elon Musk, billionaire, he tweeted that he is in favor of India plant, and some announcement on the location can come by October this year. But that was manufacturing part and manufacturing plan, which was quite clear and in public domain after Elon Musk tweeted it. Later on, the vendor-based plan is now out, and it looks like vendors will be taken on board before the Tesla plant is put up here in India in October. That is the plan of Tesla. It's a long drive in India and not just a short-term thing just to put up a plant and sell cars here, but put a whole ecosystem of innovation, manufacturing and having a vendor base also.
Right, thanks Sumit for all those details, but my colleague Shrishti is also joining in on the same. Shrishti, what does this development mean for Indian OEMs and what are you gathering here?
Well, yes, Tesla is seen to be in making for big plans for India Inc., and wherein they are not just looking to set up a manufacturing plant, but now they are planning to set up a vendor base as well, and this could actually be a big boost to the Indian auto ancillary company. But before coming to the list of stocks that are in focus, let's have a look at what are the big plans for Tesla. So definitely they are looking to manufacture cars in India. They are negotiating on those terms. But before that, we also get to know that the supply and vendor base is what they are looking forward to. And as we know that Tesla has big plans in terms of the production level, because for calendar year 2023, they expect to be ahead of their long-term target of 50% CAGR with a target of 1.8 million cars for the year. Though it is a target for the whole calendar year, but it is expected to continue the same in the years ahead. And if India is going to be a part of that, that will be a big boost for the Indian auto ancillary sector specifically. But when it comes to the stocks and the list of companies that are expected to benefit, although we are still awaiting more clarity on this particular news development, and maybe towards the end of the year we will come up with the blueprint of Tesla plans for India Inc. But for now, we are seeing that all these Indian auto ancillary companies are doing phenomenally well, and they have a lot of focus in the EV space. They have started building on to their EV specialization as well as getting global orders as well. Just to highlight some names there, then Uno Minda, Lumax Industries, Suprajit Engineering, Samvardhana Motherson, Sona BLW, as well as Fiam Industries, Sundaram Fasteners, Varroc Engineering, and the list goes on for all these companies which now have good presence in the EV space. And not just that, when it comes to association with Tesla, then we have got three names out there, wherein Sona BLW, Bharat Forge, as well as Sandhar Technologies. These three companies are already said to be in reports that they have connection with Tesla Inc. So maybe in the years ahead, all these companies as well as these three names specifically are expected to benefit when Tesla really enters the Indian markets.
As far as the vendor base is concerned, every company in the world is examining this China plus one strategy. And I think it makes eminent sense for Tesla to use India's, we have fairly well-developed auto ancillary companies, which are reporting mentioned. So to use it as a base for components, and these components could be used for other countries like also. So that seems a more practical proposition. Already that they have some relationship, but that is something which they can do on. But as far as the setting up a plant is concerned, I don't think it makes sense for them. Government has got this production linked incentive scheme, advanced cell chemistry scheme. So probably when they get into vendor base, other things, it can probably help them. But at the moment, the vendor concept is more logical.
Time, trying to make a big mark over here. I think, at the end of the day, EVs, as we have seen with the success of the Tata Nexon, they have to be affordable, they have to be relevant. And I don't think Tesla is going to cater to that end of the market. At best, there'll be a niche in this market and, clearly maybe have some exports out of here. Coming to the suppliers, suppliers already supplying to Tesla. So that's again nothing new because Tesla, we are a part of a global supply chain. Indian ancillary industry really is now plugged into global supply chains and even for EVs. So I think that again is something which is just something that is happening.
Okay, let's get in an update as the cyclone Biparjoy intensifies and 11 people have been rescued from Dwarka, which is a coastal town along the Gujarat coast. They were rescued from the private oil rig which was in the sea. 15 NDRF teams have been deployed in the state for the cyclone, which is set to make landfall in the state on 15th of June. Prime Minister Narendra Modi yesterday chaired a review meet to monitor the preparedness, and in Maharashtra, one of the runways in Mumbai has been shut temporarily after the rains lashed in Mumbai. Several flights were delayed and cancelled as well. We spoke to GP Sharma, president of Skymet. Let's go across and listen into what he had to say.
We have a very severe, actually extremely severe cyclone. I will put it the other day, we had Mocha, which was moving in Bay of Bengal. It's severe than that. Okay, the only good thing is storm is a little away from the coast. It's tracking northward, all right. But then at the moment also, it's about more than 300 kilometers southwest of Porbandar. Even when it comes Abim, Dwarka, it will be at least about 200 kilometers, if not more, away from the coast as such. So it's moving a little away. It is not dangerously close to those places, okay? But then these storms, they are monstrous. They have a reach up to about even 250, 300 kilometer also. So we need to be cautious because the coastline is such, you see, Saurashtra coastline, as we move from Somnath towards Dwarka, it is storm is shifting closer. The coastline is such, its orientation is such. So therefore, we have to be very cautious.
We have to be very cautious with the cyclone. That's the latest view coming in from the experts. But with that, let's quickly slip into a short break. Don't go anywhere. More news and updates on the other side.
Welcome back, and you're watching Market Cafe on ET. Now let's look at how the Asian markets are doing, because the handover we got from the US market was positive, but as of now when you're looking at Hang Seng, that's down almost 0.5% in trade. Shanghai too is trading with almost flattish trade to a slight bit of a negative bias that we're seeing coming in for Shanghai as well, down almost 0.2% in trade. But let's pull up Nikkei, because that one has opened up on the positive side. It's at a new one-year high as well. It's the first time we're seeing such high levels for Nikkei in 2023. So yes, that's what's doing well. Nikkei is doing well in trade. Kospi too holding on to good gains over there, are almost 0.4 to 0.5% trade in gains coming in for Kospi as well. Keeping an eye out on that, because SGX Nifty as of now is indicating a bit of a muted start to a positive start coming in for the SGX Nifty. Keep an eye out on that. Asian markets have opened up a bit mixed is what you could say coming in, given that a US inflation forecast that's seen a fall coming in as well. So keeping an eye out on that one. See.
Hello and welcome back, and thanks for staying tuned to Market Cafe here on ET Now. Now, there are several stocks that are gaining street interest of late and merit to be on investors' radar. While analysts seem to be most bullish on stocks like Adani Ports and Ujjivan Small Finance Bank, they see high return potential in the likes of Sobha and City Union Bank. My colleague Somit joins in with more details. Somit?
So we have listed out 20 stocks here, and the only filter that we have applied is that there should be at least 10 analysts covering the stocks. So the first 10 list that we have is the stocks where analysts are most bullish on, which means that all the analysts tracking the company have a buy rating on the stock. And firstly, the stock that comes up here is Adani Ports, where 21 analysts are covering this stock, and all of them have a buy rating, and the return potential on the stock is close to 15%, and that's on the back of strong port volume outlook and debt reduction plans of the company. Then there is Ujjivan Small Finance Bank, which has given a strong loan book growth outlook. They're expecting their loan growth to be around 20 to 25%, as against an industry growth of around 18 to 20%. However, the return potential on the stock is just 8%. Then there is VIP Industries on the list, which has a 29% return potential, and 12 of the analysts tracking the company have a buy rating, and this is largely on the back of strong demand outlook, stabilizing raw material prices, that is crude derivatives, and enhanced focus of the company on ladies handbag. And these are the factors why analysts are bullish on VIP Industries. When it comes to Ashoka Buildcon, now it has the highest return potential in this list with around 49% return potential, and all the 12 analysts tracking the company have a buy rating, and this is largely on the back of cheap valuations, healthy and diversified order book, and the fact that management has restarted their monetization plans, and these are the factors that have kept the analysts bullish on the stock. When it comes to Karur Vysya Bank, is the consistent performance on asset quality and growth and strong FY24 guidance which have kept analysts bullish on this count. Other than that, there is Fortis Healthcare, Eris Life Science, NHPC, CCL Products, and Poonawalla FinCorp, which have around 10 to 11 analysts tracking the company. All of them have a buy rating, and the return potential ranges around 10 to 21%. Now the other 10 stocks that we have, now all these stocks don't have all the analysts at least covering the stock have a buy rating, but there are no sell call on this, literally 0 to only 2 sells call on these companies, but the return potential on them is more than 30%. Firstly on the list is Shobha, and it's on the back of pre-sales, strong pre-sales growth guidance of around 15 to 20% for FY24, along with this strong launch potentials and deleveraging plans, which has Shobha has a return potential of 43%, that is the highest. When it comes to City Union Bank, it's the improving asset quality trends, stable net interest margins, and the performance that we have seen recently. When it comes to CSE, it's the higher dividend yields, a stability of a regulated business, moderating losses from new distribution circles and improving utilization levels, which has led to this higher return potential of 36%. When it comes to LIC, it is the cheap valuations, large customer base, huge agency network, strong brand equity and low impact of changes in the taxation that have kept analysts bullish. When it comes to Federal Bank, it is the potential ROA improvement, stable net interest margins, strong liability franchise and cheap valuation that have kept analysts bullish. Other than that, there's Gland Pharma and Max Financial, which have a return potential of 32%, and then there is UPL, Star Health and PNC Infra, which have a return potential of close to 30 to 31% over the next 12 months. So keep an eye out for these 20 stocks in trade.
Okay, thank you so much for that. Surely we'll be keeping an eye out on all those stocks in trade as well. But let's move on. And India's CPI for the month of May has come below estimates at 4.25%. Now, food price inflation has come at 2.91% versus 3.84% in the month of April. While obviously the CPI rural inflation has come at 4.17% versus 4.68% in the month of April. Let's go across to my colleague Harsh, who's here with more details on the data.
Well, yes, a definite positive coming in for the India CPI number. What we're seeing in the May 2023 print is CPI has come off quite sharply. May 2022 saw CPI up 7% year on year. May 2023 saw that number come up by just 4.25%. The larger anticipation by most economists on the street was 4.3%. So this number is definitely a positive. What's led to the cooling? Well, consumer food price inflation has come off quite sharply from that 8% number in May of 2022 down to just below 4% in April 2023 to now below that 3% number. So that's one big positive coming through. The other piece also is RBI is expecting in Q1 FY24 the CPI to be around that 4.6% number. Now, in April of 2023, the numbers come in at 4.7%, now at 4.25%. So if we are able to maintain this into June 2023, it will definitely be a positive for the overall of Q1 from an RBI standpoint as well. So that's another big positive, if I can call it. Within the food basket, we are seeing inflation come off quite sharply. We are seeing vegetables inflation down 8%, oils down 16%. Even though milk products are up almost 9% on a year-on-year basis, and spices is seeing an uptick of nearly 18% year-on-year.
The extra growth seems to have come in from consumer non-durables, which is the FMCG segment. Most of the others are more or less on track. So this does show that the fears, particularly from the rural segment, of a fairly weak consumption trend in the last couple of months, that now seems not to have actually happened. FMCG sales, which is the consumer non-durables part, besides all the other infrastructure, capital goods, etc., that you're mentioning, those were expected to be robust. Electricity, of course, because of the unseasonal rains in the month of April, we had expected electricity demand to have been weak. But overall, I think this is a fairly good growth inflation mix, that consumer goods demand seems to be relatively strong, relatively resilient, whereas although core inflation is probably still sticky, overall inflation is coming down. So the two paired together paints a fairly good, a comforting picture of the economy.
This year we have seen that even prices of rice has gone up in the market. So both rice and wheat are the pressure points which we are seeing. Add to this the fact that you've not mentioned pulses, but I think in pulses inflation has been over 6%, and this is something which is increasing. So I think when we are talking of El Nino and the possible impact it may have on the Kharif output, where cereals as well as pulses are the ones which are covered, I think that is something which will be of concern both for the government as well as the Reserve Bank of India, because most of the forecasts of inflation, which appears to be very much on target with what the RBI has forecast for the first quarter of being low, will probably happen in case we have a normal monsoon. But any kind of El Nino impact affecting the Kharif crop will definitely have a negative impact.
So that was all on India's CPI data for the month of May. But shifting focus from macro to equities then, and let's get you the latest on what's happening with Z. Now, market watchdog SEBI has banned Subhash Chandra and Puneet Goenka from holding a director or a key managerial personnel position in any listed company until further notice. My colleague Ankur is here with more details from that interim order and more key findings of what SEBI has said in its investigation. Ankur?
Yes, in an interim order passed on Monday, the market regulator SEBI has barred Subhash Chandra as well as Puneet Goenka from holding any key managerial position in any of the listed companies. They cannot be directors in the listed companies. That is what the order has said. SEBI has said that there was siphoning of funds which was done from the listed entity, and that was done for their own benefit. The order further alleges that no processes and structures inside ZEAL to stop poor governance practices. In fact, the investigation which was done by SEBI has also questioned the share price drop which happened between FY19 from rupees 600 to rupees 200 despite the company being profitable. The order has further stated that in the same period the promoter shareholding dropped from 41.62% to 3.99% currently. Now what can the respondents, meaning the persons who has been sent notices, can do? The Z board has to call a meeting within 7 days of receiving the order, and Subhash Chandra as well as Puneet Goenka can appeal against the order within 21 days of the passing of the order, as well as they can also ask for personal hearing if they require to SEBI. Now we need to wait and see what impact actually this order will have on Z and Sony merger, which was on cards and it was announced by the company earlier.
Okay, thank you so much for that, Ankur. But let's move on, and in an exclusive interaction with ET now, SBI Chairman Dinesh Khara shares the bank's rationale behind raising 50,000 crores via bonds, says that they want to ride on the strength of the bank balance sheet as well. Let's go across and listen in.
We are raising capital. This is going to be a 81 itself is somewhere around about 20,000 crore approval we have taken. And we will also be raising some infrastructure bond because we have got a decent book of infrastructure bond. So when we look at the pricing of the infrastructure bond and our book which is there to cover it up, it makes a lot of economic sense for us to go for the infrastructure bond, and then we'll be raising some tier 2 also. So essentially we are doing all this because we feel that we have obtained the approval, and we'll be in fact, we will be very mindful about the prevailing interest rates, and accordingly will be knocking at the door of the market for raising the money. But yes, of course, we have a plan which will be done during the course of the year.
So no equity raising plan in FY24?
See, the way we look at it is that since we have got an ability to raise 81, and also when we look at the tax efficiency of our 81, from the point of view of the cost cost of capital, 81 makes a lot of economic sense. So that is the reason why we want to really ride on the strength of the balance sheet, raise 81, and create more and more value for our stakeholders.